calming down. We're calming down. I was very happy to see that we were actually trading down today. It's rare that you're going to see me happy that we're down, but it was very healthy that we were down. Said a couple times last week that we were rallying a little too hard, a little too hot. Even after Monday's rally, just the first rally of that week, I said the rally was warranted, and I'm a firm believer that that rally was warranted. The numbers were starting to get better. As soon as the numbers started to get better, we needed to rally. But we were rallying too hot. Best week last week since like the 70s. Very volatile time in the 70s. Very volatile time now. And if you're going to be buying right now, which I think you should be ready to stomach some volatility. Now, I personally don't think we're going to get back to the lows. When we were going on the aggressive downturn, I didn't want to call a bottom. Then all of a sudden, March 19th comes around, I make a video wearing no shirt, just a robe. I say, I'm calling a bottom now. And that turned out to be the bottom. And my gut told me that, and I'm sticking to my gut on that one. That's the bottom, and we're not getting back to those levels. And there's no reason why we would be. We factored in economic damage, we factored in job losses, and we honestly factored in longer and more extended coronavirus time than it seems like we're getting. It looks like we're going to stick to this April 30th guideline. President Trump says he's going to come out with that decision soon. That decision is going to be really telling. Whatever that decision is kind of the next catalyst that's going to give us some guidance on what's going to happen. Now, tomorrow, the banks report earnings. That's going to give us some insight onto the consumer. Are people paying that money back? Are companies paying that money back? We're going to get a whole lot of information on that JP Morgan call tomorrow morning. I'm going to be listening. I encourage you to be listening to that. A lot of good information on the markets and what's going on in the economy. But seeing the sell-off today, no bad news came. We had oil come to a good agreement. No bad news. That was good news. Healthy reaction that after an not insane, but very strong rally, we see some cooling off, some pullback, some sell-off, and that's just good as an investor if you've got a long-term time horizon. Now, what do you do in these markets? If you're a trader, if you can find pockets and, stake on a rally, get that rally, or find a pullback that's going to happen, do that. Go ahead and do that. If that's your thing, that's definitely a thing to do. Now, if you're, a person who wants to play the long game and find value, this is a good opportunity to find value, but you don't buy an ETF here. I'm not about buying ETFs, not about buying indexes. We want to pick winners. We want to pick winners at good prices. We want to find good value. And there's a lot of good value here. Something like Twitter. I don't want to talk about individual stocks. It's illegal. I have Twitter. My clients have Twitter. Twitter's a stock that I like a lot. So if you find something like that, that's a really low PE ratio that has potential for growth. And Twitter, believe it or not, is having, before coronavirus, more monetizable revenue per user than they've ever had before, and more user growth than they've ever had before. So the fact that coronavirus is happening and accelerating what was already the best numbers that they were ever technically having is a good sign. And then plus they're doing a lot more innovation on the back end, the ad side back end. Before, Twitter could only kind of take on big clients with a lot of money and a huge ad budget. They had to talk to a sales rep, get on the phone, a whole long approval for ad process. Now they're kind of borrowing and siphoning from Facebook's model, which is, a back end app, and anybody, whether it's $5 a month or $5 million a month, a day can just create an ad. So that's going to be good for Twitter, and those are the kinds of stocks you want to be looking for. And you buy them, you just buy them, you bite the bullet, pay the price. You might have a down day tomorrow, you might have a down day the next day. The fact of the matter is you just got to find the value and stomach the chop. It's still coronavirus, still economic uncertainty. We just got to remain tough-gutted, trust our gut, and we're going to come out on the upside in the long run. This is the time for the patient investor. If you're a patient investor, if you're willing to buy and hold, find good value, and realize and be confident in that value, you will make money. That's where the money is right now. It's in the patient investor. It's also in the trader. If you know how to play volatility, you know a lot about options. I have one or two options that I'm buying here and there. I do long and short, mostly long, a little bit of short. I want to get some of those nice swings. This is also a time for that. Now, I'm not a pro at that. I kind of just bet on earnings. So you heard me talk about JP Morgan earnings. I'm betting on some other earnings, not JP Morgan earnings. I own JP Morgan stock. I own JP Morgan stocks, and now I have to say that. So yeah, that's how we're playing it. We're being patient investors right now, looking for pockets of value, buying pockets of value, and holding on to them. That's how you're gonna win. So until tomorrow, peace.